All right, everybody, we're about ready to get started here. So welcome to the Colony Court Apartments 506C Multifamily Investment Opportunity webinar. We're just going to talk a little bit about the property, the opportunity, and how you can invest. So as an overview, we'll talk a little bit about us and the team, talk about the apartment building, Colony Court Apartments, some of the property features. We'll also talk about why we target and we like Kansas City as a market overall. We'll talk about the sub-market where Colony Court Apartments are located, our plan to increase the cash flow and the value for the opportunity, as well as the next steps on how to invest through the new investor portal or any other questions that you might have for us.
So a little bit about ourselves. I'm Zach Winter, and I'm one of the founding partners of Prosperity CRE along with Mark. I'm a licensed attorney, but I don't currently practice law. I invest full-time through Prosperity CRE. I'm also a former real estate and mortgage broker, and I've been investing for over 20 years.
And my name is Mark Rios. I'm also a founding partner of Prosperity CRE. I'm licensed NMLS as a loan originator on the residential side. I'm also a licensed California realtor, although I'm not a practicing realtor. I've been probably 17 plus years in real estate investment, also in sales and lending. And my company, I have a company, it's a commercial mortgage brokerage called TriSource Capital. We also help place structured capital throughout the capital stack. And overall, we've done about 43 million in placed structured capital and credit facilities. We currently have about 285 plus units of multifamily under ownership or management. Within that, there's about 100 plus beds of student housing. And we also own about 75,000 square feet of flex office parks.
And we also conduct several real estate investor meetings. One of them is For Investors by Investors, or FIBI. We run the West Side Los Angeles chapter. We also run another real estate investor group called Passive Investment in Commercial Real Estate, and that's a group that we hold over in the San Fernando Valley. The For Investor by Investor, or FIBI group, has over 1,700 members, and the Passive Investment in Commercial Real Estate group has over 650 members. And we're also spearheading a annual real estate investors conference that will be held at the City Club Los Angeles in downtown LA.
Also on the management team, on the GP side, we have Raj Tekchandani. He's helping out with the investor relations, as well as some marketing consulting. Raj has ownership in over 500 units right now that spanned over 3 properties, not including Colony Court, of which he's also an investor. He's been about 6 years in full-time real estate. Also on the team, we have engaged Block Multifamily Property Management. They're a large size property management group in Kansas City. They currently own or manage about 5,500 units of multifamily apartments, and they've been 27 years in business in the Kansas City area. Our lender is M&T Realty Corp. They're a direct Fannie Mae lender. They've done over $4 billion in loans just last year in 2018. And our SEC attorneys are Sklar Kirsch, Peter Fisher's our lead attorney there. They helped out with our offering documents. That's the PPM that you'll get to read and the subscription documents that you'll sign.
So let's cover a little bit about the property that we're buying. We're acquiring Colony Court Apartments. It's a nice Class B apartment complex in Kansas City. It was built in 1984. There's a total of 21 buildings on the property, 80 units. They're all 2-bedroom, 2-bath. The property has some covered parking. Some of the features and amenities include a swimming pool. It's currently wired for high-speed Google Fiber internet access. All of the units also have washer and dryer hookups. So let's talk about why we're going into Kansas City. When we consider an apartment building, we start out at the macro level and we analyze the market, and we look at population growth, employment growth. We look at how centrally located the city is, how diverse the city is. We also take a look at how the city fares with respect to apartments. Is there rent growth? Is there a high demand for apartment living? And so when we look at Kansas City, it meets all of these metrics. It's got a very strong population and very steady population growth. Currently, there's over 2.1 million people living in Kansas City. It's had steady population growth of about 1% over the last 10, 15 years. And we also like to look at what the net migration is. We look for more people moving in than people moving out. And Kansas City has had a very consistent net migration in. So if you look at the chart on the right, the far right column shows the net domestic migration in, and you can see it's had a very steady net migration in over the last 5, 6, 7 years. We also look at employment growth, and again, Kansas City fares very well on employment growth, a steady increase in the labor force, as well as a steady increase in the number of jobs that are available in Kansas City, and that results in a very low unemployment rate. Unemployment, in fact, in Kansas City is at a 10-year low of just 3.4%, which is also below the national average. And it's also centrally located. It's in the breadbasket of the U.S. It's very, very accessible, both in terms of highway accessibility, rail transit accessibility, and air transportation accessibility. It has the highest number of freeway lane miles per capita in the U.S. So it's got a number of interstate highways running through Kansas City. It also is #1 in the U.S. in terms of freight volume by tonnage. And it also has an international airport, which is one of the requirements for us when we're looking at markets in which we're considering investing. The airport is also in the process of expanding. They're in the process of a $1 billion expansion, and they're adding 39 new terminals. It's also a very diverse economy. It's got a number of different industries that are in Kansas City that support both blue-collar and white-collar jobs. Healthcare IT, Cerner is the nation's largest healthcare IT provider, and their corporate headquarters are in Kansas City, very close to this apartment complex. It has a big sector in the biotech and medical research areas, animal health, international transportation and logistics, insurance, automotive, industrial, and distribution. Very, very diverse economy. And another factor that we consider is with respect to apartments, how well is it faring for apartment owners? And when we look at the metrics in Kansas City, again, it's got very strong metrics. So we've seen consistently steady rent growth. The chart on the left shows rent growth by the various types of apartment units. So studios, 1 bedrooms, 2 bedrooms, 3 bedrooms, they all showed consistent rent growth. And then we also see consistently low vacancies. In fact, right now, Kansas City apartment vacancies are near their all-time low. And that is an indication to us of very strong demand for apartment living. So when we look at Colony Court Apartments, we also want to see where is it located and how is that submarket doing? And does that submarket have the characteristics that we like to see when we're investing in apartment buildings? And Kansas City is in a very, Colony Court is in a very strong submarket. We consider the school district, we consider the neighborhood. Is it in a residential neighborhood? Is the apartment complex located nearby strong employers, nearby good shopping, restaurants, entertainment? And is it accessible to other areas of town, accessible to nearby highways? So the school district, in fact, is an award-winning school district. It rates 10 out of 10 when you compare it to other school districts in Missouri, and it rates 9 out of 10 when you compare the school district to other school districts around the country. And when you hone in and look at specific schools near Colony Court Apartments, the schools also rate very, very high. So the nearby elementary school, Maplewood, rates a 9 out of 10, and Topping rates an 8 out of 10. And the nearby high school, North Kansas City High School, rates an 8 out of 10. So the schools are doing very well in the area.
We also, when we're looking at submarkets, we like to see our properties located in strong residential neighborhoods. Here you can see the Creekwood duplexes, which are located directly across the street from Colony Court. These are 3-bedroom duplexes, 2 stories, 2-car garages. They're currently renting from $1,175 to about $1,200 per month. And then you also have right down the road, I'd say less than a mile away, another set of townhomes called the Bennington Townhomes. These are 2- and 3-bedroom townhouses, and they currently are renting for about $1,250 to $1,300 a month. Colony Court's near lots of major employers on the north side of the Missouri River, just outside of downtown. Zach mentioned Cerner, the largest healthcare IT company in the country. They have about 12,000 plus employees located in Kansas City. And Cerner is probably about 2.5 miles away. You can see it on the map, 2.5 miles away from the Colony Court Apartments. Also, North Kansas City Hospital is just a little further down to the west there. There's about 3,000 employees and I'd say about 450 or so physicians there. We believe that both Cerner and North Kansas City Hospital have a very strong employment base and potential renters for our apartments based on the location and the types of employees that are there. Also, the Ford Motor Corp plant, assembly plant, is about 4 miles away up to the northeast there. You can see it on the map. There's about 7,300 employees that work there, and it's one of the largest assembly plants that they have in the country. They currently assemble the Ford F-150 truck there. And also just down, you can see down in the south west, Harrah's Casino is down there. They have a riverboat casino as well, and that employs about 300 plus employees. That's about 3.5 miles away. And also you can see just off to the east there's Worlds of Fun, Oceans of Fun. That's a nice size regional amusement park and roller coaster ride park. And they're open from May to, I think it's September every year, and lots of people go there. Very close to the Colony Court Apartments. I'd say about 1.5 miles away from there. Colony Court's also near shoppings and restaurants and entertainment. The nearest Target's about 2 miles away. Chipotle is in the same little shopping center. There's a Walmart just a little bit further out, about 3.5 miles. Walgreens is near there, and the CVS is also just a little bit further out from there. For entertainment, obviously there's casinos on this side of the river. On the Missouri side, you have the Harrah's, which I mentioned, Ameristar Hotel and Casinos just south and east of the property. And I mentioned also the Worlds of Fun amusement park, which is about 1.5 miles away. Zach mentioned about all the various freeways that you have in Kansas City, and you can see just a small subsection of all those highways that run through. The I-35 loops basically encircles the entire Kansas City metro area. The entrance to the I-435 is less than 1 mile to the east of the property. You can see that up towards the top middle right-hand side of the map there. Also, the I-35 North is just about 3 miles away, the entrance, and that takes you all the way up to Des Moines, Iowa. And also the I-29 South is about 3 miles away, which gives very, very easy access over the river to the south and into downtown Kansas City. We estimate getting into downtown, even during peak times, takes about 15 to 20 minutes from the property. So let's talk a little bit about our plan to increase the cash flow and the value on the property. Colony Court is what we call a stabilized value add opportunity That means that the property is currently about 95% occupied, but the rents are currently below market. Also, there's room to upgrade the units and to increase the rents and bring them up to market rate. So that's what we plan to do. We have a significant amount of money to upgrade the units and also the common areas of the property. Our plan is to bring the rents up to market rate, also to improve the management, which will help us improve collections and improve retention of existing tenants, and also streamline expenses on that end. We also plan to layer some additional revenue streams, and then also we'll talk a little bit about the ongoing cash flow that we're giving to investors and the strong profit on sale. So talking about upgrading the units in the common areas, this is very strong workforce in lower kind of white collar housing. So this type of tenant expects upgrades to the level right around the $4,500 per unit. That will allow us to plan to increase rents in the $100 to $120 per unit range. What that will entail will be new wet area vinyl flooring. So the wet areas would be the kitchens and the bathrooms. This will be faux wood type of flooring and faux wood type vinyl flooring. We'll refinish the cabinets and the countertops to upgrade those and give a more modern look and feel. We'll replace all the fixtures in the property, including the ceiling fans and the faucets. We'll do brushed nickel type of faucets and cabinet poles. And we'll also do some of that vinyl flooring in the entryway. We'll do new upgraded carpeting in the living room as well as the bedrooms, and a two-tone paint scheme throughout the property. We'll also do the bathrooms. We'll do the countertops in the bathrooms, refinish the tubs. And new appliances. I almost forgot that. That's the best thing. So we'll be putting in a new stove, new dishwasher, microwave, as well as a refrigerator in each renovated unit. We also have a plan to improve the common area of the property. Currently, we have 2 admin units. One is being used for maintenance, and the other is being used as the leasing office. Obviously, we'd like to recapture those units so that we can bring them online and make them rentable so that we can increase the income for those units. Currently, our plan is in year 2 to build a leasing office right off of the side of the pool area. As you can see on the left-hand picture, the arrow is pointing to an area where we think we can lay a foundation and also build off the existing pool house structure there. We plan to build about 900 square feet of leasing office that will connect to that probably 450 square foot pool house. And also then we'll have like a nice window overlooking the pool from there. That will allow us to bring the office back online and get about $900 a month for that unit. Other common area amenities that we plan to add is we're going to enhance the swimming pool. So we'll get some new swimming pool furniture there, some umbrellas, perhaps even put like a picnic bench up there, maybe a barbecue up there so people can, have small parties. We do have a little bit of repair work to do around the swimming pool area and just kind of upgrade the landscaping around that and make it look nicer. We're going to put a bark park or a dog park, and there's 2 green areas on the property that we can designate as our bark parks, as well as there's one very nice area to put a barbecue and picnic benches so that the tenants can have a place where they can go out and barbecue and have gatherings. Other than that, we'll do some improved landscaping around the property, which we have in our CapEx budget. So talking a little bit about the current rents. Right now, the current asking rents are between $800 and $830 a month. This is unrenovated. If you look at the last 10 leases that came onto the property, on average, for the 940 square foot units, they're running about 775 unit on average, and about 814 per month on the 1,000 square foot on the bigger one. These are unrenovated current rents right now. We do have 1 unit that has been rented at $900 a month. That's our target for our renovations. They renovated the property along the lines of our current plan. They spent about $4,500 to renovate the unit. They're getting $900 a month, and that was on one of the 1,000 square foot units. So our renovation plan is going to last between 18 to 30 months. The property is currently 95% occupied, so in order for us not to have a big dip in occupancy, what we plan to do is rehab the units on the lease turns. Our plan over those 30 months or 18 to 30 months are to increase the rents about 15%, and targeting that $100 to $120 a month premium on the renovated units, which will give us about $900 a month with an average of 970 square feet throughout the property. Other revenue streams that we plan to implement are each of the units have washer and dryer hookups, but the tenants are either not having washer and dryers inside their units, or they're renting washer and dryers, or they have their own. And so we plan to install actual washer and dryer units and rent them out at a premium of about $35 a unit. At $1,000 per set of washer and dryers, we estimate it'll take about 2.5 years to get paid back on those, and then it'll be pure profit after that on those. We also plan to implement a trash valet service. And so what we will do is find those tenants who don't want to schlep their trash all the way across the property to the trash bins. We'll have this service. We'll do it 2 times a week. And for those units, we'll plan to implement a premium of about $15 per unit per month. Also improving management, we have engaged Block Multifamily Group. They're a very large professional third-party management company and construction management company. They currently have under management, I'd say about 5,500 units that they're running. Many of them are in the Kansas City area. Block Multifamily, they've been in Kansas City over 27 years, and so they have a depth of experience and know-how. They can easily handle our property. In fact, we are currently looking for more properties in the Kansas City area that we'll be putting under their banner. And we think it's a good move to bring new management in. The current management company has been on the property over 10 years, and they haven't been doing the greatest of jobs in terms of handling a lot of the deferred maintenance, the renovations. They've just been kind of maintaining the property. So having fresh blood come in and operate the property is #1 priority for us.
Let's take a look at the projected cash flow and profits on this investment opportunity. As Mark mentioned, it is 95% occupied, so it's a stabilized property. And so we're projecting investor distributions beginning in the first full quarter of ownership. So in this case, it would be in October, would be the first investor distribution. And the average annual cash flow while we hold it, we're projecting between 9 to 9.9%. If you factor in the profit when we sell the property, the average annual returns are between 25.8 to 22.9%, depending on how long we hold it. And so the other nice feature with this investment opportunity is that we'll be increasing the cash flow and value enough so that at the beginning of year 4, we'll be able to have a supplemental loan, which is essentially a cash out second loan, and we'll be taking all of the cash from that supplemental loan and returning it to the investors as a return of their initial investment. At that point, they'll be getting about 39% of their initial investment back at the beginning of year 4. And then when we sell the property, which we'll be looking to do beginning in year 5, they'll get back the remaining 61% of their initial investment and their share of the profits on sale. So as an example, if you were to invest $100,000 In year one, you'd get about $7,853 in your annual distributions. In year two, that would increase to $8,563. In year three, you would get an additional $9,491 in your quarterly distribution. Plus, at the end of year three, beginning of year four, you would receive your return of 39% of your initial investment. So in this case, it would be approximately $39,000 if you had invested $100,000. Then you would continue to cash flow after that. So in year four, you would receive $10,665. In year five, you'd receive your annual cash flow of $8,545. When we sell the property, if we were to do that in year five, you would also receive your remaining $61,000 and change of your initial investment, plus your share of the profits, which in this case would be $83,940. So your total return would be approximately $229,000 from a $100,000 investment.
So let's talk a little bit about next steps. We have a investor portal where you can log in and you can review the investor docs, the PPM, the private placement memorandum, and the subscription docs. And we have a DocuSign process for that. You can do it all on the computer. That's at invest.prosperitycre.com. Critical dates for this investment: the funds and the paperwork due in order to make sure your funds are usable for closing. We need to have all the paperwork done and the funds hit the bank by May 28th, 2019 for the closing date of May 30th, 2019. So as we mentioned at the very beginning, I believe, the investment they're filling very quickly. You can reserve your spot now by just sending us an email at investors@prosperitycre.com. Just let us know your investment amount so that we can kind of save your spot. And if you like, you can log into the investor portal or ask us for the instructions if you need a hard copy or a digital copy of the investor docs. So that is about it. What we'll do is we're going to shut off the recording now, and then we will talk just a little bit. We'll take some questions on the opportunity.